How's it going, everybody? Hope everyone's had a good week so far. At TDR, we've had quite a hectic week. We were supposed to be in Benzinga. My travel plans got kibosh thanks to Milton. Shad was there, then Shad had to go home to deal with a medical emergency, but he's fine. He'll be back Monday on the podcast. On today's episode, I'm going to be diving in to a lot of capital markets conversations with Peter Sack, managing partner of Chicago Atlantic, as well as Scott Gordon, executive chairman of the newly minted Chicago Atlantic BDC. Talk about capital formation in the industry, talk about just the general overall sentiment in the space, what they're looking at and private operators, public operators, and to kind of dive in the conversation. After that, we're going to dive into Tilrays earnings, as well as some updates on Florida and Canopy closing the Wana acquisition with Guap, and then take it home into the weekend with a mic drop episode. Once we're on the back end of the episode, as it relates to the segment with Guap, feel free to drop in any questions you guys might have in any headlines or I guess pressing issues in the sector this week. And I guess without further ado, Arns, let's bring up Mr. Sack and Mr. Gordon from Chicago Atlantic. How's it going, gentlemen?
Good. Good to see you.
Thanks for having us. Good
to have you guys on. It's been a busy week. How's Benzinga, Peter?
It was great. There was a fervent sense of optimism and activity that I think is a big improvement over last year.
Yeah, I heard there was a lot of conversation around hemp, a lot of conversation around kind of just the upcoming ALJ hearing, but I mean, we can get into that with the rescheduling talk as we get further into the conversation. And then Scott, thanks for joining us. Welcome to the program. It's good to have you. Congrats on closing. I think it was October 2nd was the press release that went out with the closing of the Chicago Atlantic BDC. And for those that don't know, BDC might be new for a lot of investors in the cannabis space as it relates to the actual vehicle. Scott, what is a BDC and how did it come to exist, and how is it going to be effective in capital allocation within the cannabis industry on a go-forward basis?
Yeah, sure. So BDC, which is short for Business Development Corp., is a 40 Act investment vehicle governed by the 40 Act, unlike REITs, which are not part of the 40 Act, as an investment company. And the BDC construct was really started as a sort of a means by which to direct capital into sort of, small and medium-sized enterprises in the U.S. And, there's a number of them that trade publicly. There are private BDCs as well. They're, closed-end permanent capital vehicles. We IPO'd about 2.5 years ago. What is the first and the only BDC that has explicit permission from the SEC to engage in lending to cannabis companies. Okay. So we have a fairly sort of unique asset in that. You've got, I think, upwards of another 35 or 40 public BDCs. None of them, as far as we know, have engaged in any cannabis lending. I think apart from just sort of the regulatory differences between, say, a REIT and a BDC, the primary difference for investors to understand is that the BDC really is sort of a cash flow lending vehicle, whereas REITs are subject to predominantly lending against real estate collateral. So if you think about the cannabis industry, as it evolves and you have more and more companies that are cash flowing, our universe expands really with the growth of the industry. It's sort of a much bigger playing field, if you will, for us to deploy capital into the sector than what is the limited playing field of the REITs that are subject to just a finite amount of whatever collateral exists out there that's pledgeable within the sector.
And when you talk about lending on cash flow, I mean, not to get too much into foreshadowing, but I mean, we all have the expectations that 280E will eventually be alleviated from a lot of the companies that we're in, and pretty much all the companies that are plant touching in the space. Is this kind of getting ahead of that and seeing the maturation of, let's say, capital allocation throughout the cannabis industry evolving into these BDC vehicles?
Yeah, for sure. I think that whether it's a BDC vehicle or other types of vehicles that have, the ability or the mandate to do cash flow lending. But if you think about really sort of the short history of capital formation in the industry, a BDC wouldn't have anything to do 5 years ago, right? Like the only lending that was viable 5 years ago when people started lending to the cannabis sector were either, hard money loans or loans against assets. Hence, sort of the early evolution of investment vehicles were predominantly real estate focused, including REITs. I think as, the industry grows and you have more companies that are cash flowing, and particularly if we've got rescheduling going through, which we expect will happen, and the removal of 280E, that's a massive sort of leapfrogging for companies on a cash flow basis, and will be sort of a huge step for us in terms of increasing the universe of companies that we look at.
And then, Peter, as it relates to refi, we've seen, I don't want to say a lull in the cannabis space, but we've seen kind of, I guess, uncertainty come into the fold after we really saw the ALJ hearing be announced for December 2nd. SAFE hasn't gone anywhere this year. I know that from a retail perspective, we're waiting on catalysts. I know from an institutional perspective, you guys have the, I guess, malleability to look much more longer into the future. What are you seeing in terms of, let's say, strength in any of the potential deals that you're underwriting or any of your current tenants? I mean, is everything still looking pretty sound, all things considered, with what we're seeing in the capital markets?
Yeah, I think in the last 6 months, there's been a revival in capital market activity, driven not by necessarily rescheduling, not by SAFE Act, but driven by fundamental performance and fundamental execution of operators across the country, particularly in strong operators coming out of adult use in Missouri, strong operators coming out of adult use in Maryland, and operators preparing for what we hope was good news in Florida, and preparing for adult use in Ohio. And so the capital activity has really been about fundamental performance, either leveraging cash flows that have been generated from increased profitability after the transition to adult use in places like Missouri and Maryland, or in states that are, and operators that are preparing to serve their markets in adult use in places like Ohio and Florida. And so it's, in some ways, it's refreshing because it's less speculative on potential regulatory change and driven by fundamental performance, the fundamental ambitions of operators to grow their businesses.
Speaking of Florida, I did want to ask you guys both a question on Amendment 3. This is a very catalyst-driven conversation as it relates to the cannabis industry. Do you see Amendment 3 being higher impact to the sector versus rescheduling, or is rescheduling really that panacea that we need to get to that will kind of rising tide lifts all boats, and then we really start to roll in federal reform? Because I've heard differing opinions where some people will say Amendment 3 passing in Florida going adult use is that shot in the arm that's really going to get the sector moving from a fundamental perspective. Either of you could take that.
Scott, you want to go first?
Sure, I'll go first. Look, I don't think there's any panacea for the industry, and I think the history of people hanging their hat on the hope of regulatory reform to rescue the woes has been a sad story of false hope and deflated dreams. That being said, obviously Florida is huge. And will be a gigantic step forward if it passes, as will be rescheduling. I think it's extremely difficult from our seat to underwrite to any of these regulatory changes happening, right? I think, the presumption is we sort of continue in the status quo environment. As Peter alluded to, you look for companies that are able to operate, without regulatory change, hope for, things like rescheduling in Florida to happen and take it one step at a time. But I tend to think that, sure, both of those will be massive. I think it's hard to sort of, in the hypothetical really debate, what's bigger than the other. And, I think at this point, anyone's prognostications about when full on federal legalization happens and that's just become a fool's game and trying to predict that, right? Because, it's so fraught with imponderables that it's impossible to say.
Yeah, I heard there was a line from the conference this week that after federal legalization is going to be a tsunami of money that comes in. I was like, if we've moved the carrot there, we're not really on too solid a footing. We should probably focus on what's going on now, because as much as we all want federal legalization, realistically, it's very far away, barring some sort of miracle. I mean, you had mentioned the strength of assets. One of the conversations we've been having is, I guess, differentiation between, if there is differentiation between publicly traded assets that we know as the MSOs and privately traded assets that are still also MSOs in their right. We just don't talk about them as much because they're not front of mind. From an underwriting and I guess a strength of the asset perspective, do you see any differences or key differences between public and private companies when you're evaluating deals?
Peter, go ahead.
Yeah, so we spend, we underwrite a number of public operators, but it's certainly not the majority of our work.
Okay.
And we spend most of our time with what's a market of hundreds of private operators, some of which are single state and some of which are multi-state, that are generating cash flows north of 10 million of EBITDA per year, and are performing extremely well. And we consider those sort of one or two levels below the MSOs in terms of scale, and one or two levels below in terms of potential acquisition targets from the MSOs. So it's important to understand the large cap market, but I think we spend the bulk of our time on identifying those top operators that are winning in their markets, but might not make all of the headlines.
Yeah.
And I think that's one example of sort of the difference between rescheduling and Amendment 3 in Florida. Amendment 3 in Florida is going to significantly impact a number of the MSOs that have huge operations in Florida, and a handful of private operators in Florida, whereas Schedule 3 is going to have a broad-based impact across the market in every state, regardless of size of operators. Both are important, but I think the one is sort of a trickle-down effect in Florida to impact the rest of the market, and the other is really more broad-based. When we think about underwriting, some of the things that we take for granted in the public markets is not applicable to private markets. You don't necessarily accept that every operator is going to have an audit from a nationally recognized auditing firm. We work around that by either requiring audits or doing our own quality of earnings and diligence processes to address those issues.
Okay.
And we have significant teams both on originations and underwriting to perform the same level of diligence that I think many large public companies might have internally and off the shelves. We create ourselves, and that's the difference between sort of private credit, middle market lending, and where bank financings may be more limited to just public operators or larger operators.
Okay. And then Scott, I have another question I wanted to kind of come back with the BDC. From a strategic standpoint, are you looking for vertical operations, non-vertical? Where are you looking? Is there a sweet spot as far as assets go? Are you looking at like everything from tech to plant touching to brands to just cultivation? Is it just anything and everything as far as evaluating and then deploying capital, as long as there's cash flow?
Yeah, I think that's right. I think we've always been relatively agnostic in terms of, geography, MSO versus single state, brands versus non-brands. I think, what you're starting to see with the maturation in the industry is like the good operators are rising to the top wherever, they might be playing in whatever part of the ecosystem. Some states are like, for a long time, people were down on California. The sort of mantra was it's a race to the bottom. We've got great companies like Jeter and Steezy that are part of our portfolio that, have managed to find a way to, operate well and profitably in that, difficult jurisdiction. So look, I think it's, and then, in some of the, with some of the MSOs, like that's a tricky game, right? Because you're subject to the vagaries of, the shifting of sands with respect to the regulatory backdrop, right? What was once a protected sort of oligopoly can begin to erode over time, and we need to sort of stay in front of that, right? So I don't think we're dogmatic at all in terms of, where we look. We just try to find, the companies that are sort of best in class within their, particular vertical or where they play. And, obviously look for strong management teams. And ultimately, look for something that's creditworthy where, there's a very strong likelihood of, the company's ability to repay their loan. So, we're lending at pretty conservative metrics. If you look at our credit metrics relative to sort of non-cannabis BDCs, we're far more conservative in terms of our underwriting standards with respect to things like, average debt to EBITDA or interest coverage than you would find in sort of traditional BDCs that are lending to regular way U.S. companies. And interestingly, there aren't thousands of these companies in the cannabis world yet that fit that sort of bill, but there are probably hundreds and more to come. So I think and ultimately, obviously, good management teams is sort of a basic requirement on top of everything else.
Yes, you mentioned California. I've been around this sector since 2015. I think both of you gentlemen have been around similarly as far as the time frame goes. If I would have said to myself in 2015, I'm not going to name names, but we would see the tombstones that are piling up in California from what we once thought were going to be the unicorns of this space, I wouldn't have believed you. Do you think that that's just a culmination of mismanagement, onerous regulations in California, and just the way that the California market has evolved? Or do you think that is some sort of, let's say, foreshadowing for how this might play out? Like, no one is safe, and it's got to be, it's maybe the model that we started with isn't the model that's going to be in the future.
Yeah, I think a combination of a really challenging regulatory market, a really challenging black market, a really challenging tax structure, and overinvestment.
Yeah,
and I think that's naturally what happens in an atmosphere of a challenging operating environment and overinvestment, particularly investment that was geared towards the thesis of California being the production grounds for the whole country.
Yeah,
and if that doesn't occur, then it exacerbates the problems even more.
Correct. Do you think that we get? Do you think that we get
I think
there?
that's a big. Sorry to talk over you, but yeah, I think that point's critically. Yeah, no, that point's critically important. I mean, I started my first, foray into the cannabis business was I co-founded a California-based brand called Pup and Barkley, focused on health and wellness formulations and not sort of the harder core recreational user. And we started this company in 2014, 2015. The whole premise was by 2020 we'll have federal legalization. We will be this beautiful, pristine brand that's formulating products from Humboldt County and the best outdoor grown cannabis in the world, and we'll bring it all over the country, all over the world, right? And there was a presumption that 5 years from when we started there would be federal legalization and an ability to really scale that at least nationally. I didn't think we had any illusion of doing it internationally necessarily. And so I think that whole thesis of California being the centerpiece of not only just cultivation that will get exported to the rest of the country, but also for brands and product formulation to proliferate. All of that has been massively stunted by virtue of the fact that we've had, very little movement, if any movement on the federal front that would allow for interstate commerce. I think, that's been a gigantic factor in what has been the disappointment of the challenges of the California market.
Do you think that we get there eventually to where we're actually being able to utilize interstate commerce, or do you think that the opacity around all of the regulatory stuff that we're all dealing with in the short term and the long term is just far too great right now to even be able to forecast if and when that inflection point could happen? And do you take that into account in any of the underwriting when you're looking at assets in these limited license markets, such as what we see in the Midwest and the East Coast?
Yeah, it seems a long way away. Interstate commerce seems a long, certainly outside of our investment horizon. And I think it's one example of a unique lens that we bring to cannabis investing. I think most of the narrative surrounds equity investing and equity bets.
Yes.
And you could make a reasonable equity bet based on some expectation of that. Maybe it works out, maybe it doesn't, but you could make a reasonable equity bet. For our thesis around debt and credit investing, we're focused on principal protection first, and then generating a really attractive yield and cash flow profile to our investors. And to do that, we don't have to make bets on is interstate commerce going to launch our brand onto the national stage. We need to really understand the operations of the business that we're investing in as they exist today, and the growth initiatives that we're funding.
I know it's been a taboo topic, but I got to ask, since I have you both on here, about hemp. It's a big issue in the industry right now. What I would appreciate your opinion on is the investability of it. Are you looking at any hemp assets currently? Are these assets investable with the regulatory, with what they're looking at or facing potentially as far as the regulatory change? Because I've seen hemp companies in the States that are doing 9 figures of revenue, that are doing 8 figures of revenue at very, very attractive margins. But whether it's private equity, true private equity, or whether it's venture capital or any of these investors, they won't touch them. They're saying they're borderline uninvestable because of the regulatory risk that is potentially imposed in the next, let's say, 12 to 18 months.
I think that's right. I mean, had you asked me 2 years ago when, you really started the proliferation of intoxicating hemp-derived products in the marketplace, I would have said, that's going to get shut down immediately, right? It's such an obvious and flagrant loophole, which certainly violates the spirit of the Farm Bill. That people are driving a truck through, surprisingly for much longer than I would have anticipated. And I'm not taking any sort of moral or ethical position on that. Like I think markets do what they want to do, fine. But yeah, I think as an investor, certainly an underwriter, that's an extremely difficult one to really sort of count that, like, yeah, might continue or might get shut down tomorrow, right? So yeah. I think, for the operators that are doing it, either the standalone folks that are, just playing in the hemp space, or, others that are sort of creating divisions within their broader sort of, THC state regulated cannabis businesses that, are kind of creating some optionality and, taking advantage of exploiting kind of the loophole for as long as it exists, right? I think that's fine. But I think as a lender, it's really, really tough to, predict how long that might go on for. And, it could last for another 3 to 5 years. It could last in perpetuity. It could get shut down next month. I mean, that's the reality of it.
I'm with you on that. Go ahead, Peter.
A number of our borrowers are dipping their toe in and introducing products in hemp-derived categories. I think the contrast that we see is they're taking responsible approaches to doing so, and taking the lessons that they've learned from the regulated cannabis industry and bringing those standard operating procedures as they introduce hemp-derived products. And I think that's an important important process that is missing from a lot of the hemp-derived industry, whether that's formulations of ingredients, sourcing, manufacturing processes, marketing, packaging, and the channels in which they're being distributed.
Yeah, I don't think that could have been said any better. I mean, I've been very vocal about hemp. Love D9 naturally derived hemp products, whether it's beverage, gummy, THCA flower. It does allow access to flower for patients or just consumers in general that don't have access to a true medical program. But the HHCs, Delta Zeros, D8s, all of these synthetics that are around, and none of the hemp stuff is in childproof packaging for the most part. It just needs to have a lid put on it. But when you look at the major brands and you look at the MSOs, whether they're public or private, them participating in that market, they've now jailbroken their brand. Their brand's now in C-store or big box versus being confined to the dispensary. I'm curious to see with an issuer such as like Curaleaf with their select beverages, does that drive people into the dispensary from the big box retail? Because I think a lot of people are actually afraid to go into dispensaries. It's not the most welcoming retail experience. I know my wife and my mom, et cetera, it's anecdotal, but they would much rather go to a Total Wine and pick up hemp-derived beverages, even if it was cannabis-derived beverages, versus go to a dispensary. And unfortunately, that's just the facts. And I think it's more popular than we think. And I mean, on an ending note, I mean, where do you think we are a year from now? Do you think not naming anything particular? Do you think we do see regulatory change to some degree within a year from now, and we're looking back as this was really the point in time where the cannabis industry started to hit its stride, and we're not sitting here 5 years from now like we are from 5 years before with nothing really getting done for the most part, except for the fundamental progression of the businesses?
No, I think, we'll continue to sort of do what we've done, which is, 2 steps forward, 1 step back, 1 step sideways. But, we're progressing, right? You've got many more states that are, that are legalizing for medical and rec. Obviously, the 2 big regulatory issues we've talked about, which are Florida and rescheduling. And I think certainly rescheduling, will go through. We'll find out soon enough what happens in Florida. Those 2 things alone, or one of those 2, are massive. And then I think it's just impossible to say, beyond that, what might happen with things like safer, full on, federal legalization initiatives, and how long that might take, and whether it's under a Harris regime or a Trump regime. It's just impossible to predict. But I do think a year from now we'll be in a better place, regardless. And so I think that the trend is it's an upward trend. I'd like to think that we're sort of through the winter of cannabis, that we've suffered for the last 2 or 3 years, just in terms of sentiment. Absolutely. And, people realizing that, the industry's real, that there are good operators, that there's no turning back the clock with respect to, the momentum of legalization, and whether that just continues to grind on the state level while we wait for, things to progress on the federal level. I'm not sure it even matters at this point anymore.
Yeah. I'm completely in agreement on that. I'm really hoping we get something here within the next year, at least to let us stop talking about it and start doing versus speculation.
Yeah, but next year we're still going to be looking forward to the next big regulatory change and excited.
Correct.
And next year we're still going to be, I know at Chicago Atlantic, we're still going to be focused on the things that we and our management teams can control, and avoiding bets that are based on things that we can't control.
Unfortunately, there's a lot of stuff we can control right now in the cannabis industry. And from a fundamental perspective, it's really never been better. Obviously, the growth narrative could be a little bit more infused. But I mean, with these markets coming online, with 5 on the ballot come November 5th, and hopefully Florida, we start to get that top line narrative going again and growth getting back in the sector. Well, gentlemen, this has been very informative. Just to remind everybody, Chicago Atlantic, the mortgage REIT can be found under REFI, and Chicago Atlantic BDC can be found under LIEN, LIEN, both trading on the NASDAQ. This has been great, guys. Much appreciate your time, and thank you for your insight and joining us on the live stream today.
Appreciate it. Thank you, Anthony.
Talk soon.
All right. Take care.
All right, Arns, let's bring Guap up. That was a great, insightful talk. Love to get their opinions on how the markets are working and potentially the future of the industry.
Yeah, good stuff. I mean, it's always good to get the perspective coming from another angle, not necessarily, like a CEO of an MSO. They're coming at it from a totally different angle and trying to create shareholder value that way. So it's definitely it'd be good to check in with those guys every once in a while, for sure.
Yeah, and I mean, it's from a capital allocation standpoint. I mean, they're looking at everything. They're looking up and down the value chain of the cannabis industry, everything from cultivation to tech, to the picks and shovels to brands. They've got insights into everything that we're looking at on a daily basis, and deep insights, because as Peter had alluded to, they're actually doing their own QOV, their own diligence processes, their own underwriting. And in another hat that I used to wear back a couple of years back when I was heavily investing in the space, looking at private assets, you go into diligence and there's just skeletons in the closet. There's no data rooms. There's no formal diligence. It starts to really unravel very quickly. So the fact that they have that internalized and they're able to go down to the depth that I'm assuming they're able to go down to, they get a very, very, very granular look at what's going on in the cannabis sector.
Yeah. And so before we get into the headlines, definitely, we say subscribe to our baked in newsletter. I mean, Anthony, if you want to know what Anthony's thinking before the live streams, it's a great way. He writes it every morning. And we had 1,000+ subscribers last week, which was pretty awesome to see.
Yeah.
And also another thing to check out is that Village Farms tour. We took the time to go up there to Delta, BC, get some footage of that 2.2 million square foot facility. The size and scale of which is pretty.
By the way, just so everybody knows that's watching the video, Shad and I are not midgets. Orville is Orville is 6'5". So there's a little bit of depth perception, I guess, needed when watching the video. But yeah, I saw some of the comments. No, Shad and I are not 5'6".
Yeah, he's a Dutch giant. And then it was so funny. And then you go into the dispensary, and that guy's like his cousin. He's also a massive.
Yeah, he was 6 foot. He was 6'4". Yes, it was funny in hindsight after I watched it. Especially after seeing some of the comments. But Arns, let's get the headlines up here and chew through these so we can get into the weekend. I know that Tilray was yesterday. I had some stuff that I put on Twitter about Tilray. Didn't really, I guess, go off well with a lot of people. But I mean, Tilray were up on a lot of metrics, but they're still losing a ton of money. Erwin's talking about the beer stuff a lot. I mean, the beer business is over 50% of their revenue. I wouldn't classify them currently as a cannabis business. They're a diversified CPG business, and there's nothing wrong with that. There's nothing wrong with it at all. I think the alcohol revenue is up 126% year over year due to the acquisitions that took place within the quarter. Delta 9 beverages were talked about. Erwin rifled off about 20 jurisdictions that they're going to be sold in. It's going to be a show me story. If they can do what some people think they're going to do with those assets, distribute and scale those D9 beverages, it could be meaningful revenue for them, but it's also not going to be so impactful that it's going to start to offset the losses. Tilray needs to start making money on a per share basis and narrow these losses. Until then, I think there's going to be a lot to be liked about the name. What do you think about the earnings, Guap?
Yeah, I echo your sentiment on it for sure. When I look at the breakdown, distribution sales are 34% of their business. Cannabis sales are 31%. Beverage sales are 28%, and wellness is about 7%. So, I know the hardcore like cannabis industry investors sort of look down upon companies that are not just exclusively 100% cannabis. But I think you're seeing a company that is like doing what they can given all the regulations that are in place. I don't think if you had asked them 5 years ago, would they be, as diversified as they are right now? No, they would probably say they'd be in the US by now, right? So they're doing what they have to do now. whether or not you want to be an investor or shareholder in that company is totally up to you. But yeah,
Do what you want.
it'll be interesting to me because there's a lot of ETFs that have prospectuses that require you to have a certain percentage of your sales be cannabis related. So I'm keeping an eye on that moving forward with some of these companies that are diversifying into beverage and liquor.
Yeah, and I mean, I think it needs to be said that they came in well below estimates on cannabis revenue and a couple of the other metrics. I mean, this should be a building quarter. They're going to have D9 stuff coming online. I'm assuming with their grow that's going to be in Germany, it'll beef up the numbers there. Still going to keep my opinion that I think it was a weak earnings report. I think there was a lot to be just questioned on it, and I think it's probably, I don't want to say it's cause for concern going forward, but it's something that people should watch. Another LP that had a big announcement this week was Canopy. They have closed 100% of the Wana transaction. I think as of Wednesday of this week. We're going to have David Klein on next week to talk about Canopy USA, getting the rest of the acquisitions closed with Acreage and Jetty. Jetty's closed with Acreage, and getting that combined asset and what the strategy is going to be on a go-forward basis. Because everybody knows Wana has gotten into the D9 hemp-derived business with Wanderous.com. There's beverages and gummies on there now in form factors that mimic their traditional cannabis products. And I mean, they've done a great job with the beverages. It'll be nice to see once this is amalgamated and the numbers are actually reported, what those hemp products are actually doing to boost Wana's sales, which is going to be a serious insight, because what I am hearing from several operators, not Wana in particular, is they're starting to become a glut in the hemp derived space. You're seeing just a lot of beverages, tons of gummies. There's almost too much optionality, and the consumer, it's going to be very interesting to see the consumer's behavior and where they gravitate towards. There's a lot yet to be determined in the hemp space. There's a lot yet to be determined on the long-term viability of the hemp space, as I alluded to with both Peter and Scott. And it's going to be, hopefully there's going to be some regulatory change and some clarity to the situation here within the next year or so. That would be nice.
Yeah, just CGC putting together a bunch of pieces that, can be and will be useful in the future if certain things unlock, right? And so it's just another story worth tracking, given that they're putting together a lot of very useful business units, and hope to, for their sake, hope things open up a little bit for them, for sure. But yeah, in general, when we're talking about hemp derived stuff, I mean, that's something that you and I have talked about quite a bit. It just feels, this is just my feeling, is like, okay, it was like the talk of the Benzinga conference. If I were in the hemp derived space, just like anything, like when a stock and the Shoeshine boys talking about a stock, like it might be time to like think about exiting. If I was just a private operator, and I would, when everyone's talking about it, the hype is high. There's a lot of competition. I think a lot of companies are dipping their toe in to just get their brand out there, but what that translates, like you were saying, how does that actually translate in terms of people getting into the dispensary to try your other products? We're going to see some data coming out on that. But in the meantime, it almost feels like a lot of companies are, and I'm not saying that's the case here, but just, sort of checking the box. Yep, we're hemp derived's hot right now. We're in the hemp derived space. It's a very small portion of their business. The companies that are in it and have been in it and are dedicated to it have been making some good money. And now they're kind of looking around and seeing just how many other companies are now their competition. I don't know. I'd be looking to sell my company if I had a hemp derived company.
Well, I mean, there's no, the problem with that is there's no buyers,
right?
Due to the regulatory risk. So, but it's going to be something that takes shape here over the next couple of months. We'll obviously be able to see some data as these MSOs start to launch these brands and get product into market. Most notably with Wana and Select, I would expect Boris to be speaking about the Select Hemp Derived brand on the earnings call, which I think they'll be. I don't that they didn't actually report or announce they were reporting yet, but I think the MSOs are going to start to report November 7th, as per earnings. And then I guess going into Florida, obviously Milton came and went. A lot of the cultivation assets were kind of situated within the potential path of Milton. I know Milton kind of jolted south, didn't hit a lot of the direct line. You had a lot of the grows that were in Gainesville, Ruskin, which is outside Tampa. I talked to Brady Cobb at Sunburn. Their farms are fine. There was no damage. Everything's business as usual. Talked to a couple operators that fared well. Milton did not look like it had a very material impact, with the caveat of retail closures. I've seen most of the larger brands and most of the accounts that I follow on Twitter still have retail locations closed in Tampa, Sarasota, Fort Myers, Newport Richey, along that West Coast corridor. So I don't think anything was truly disrupted, but some of the retail has definitely been taken offline for the last couple of days.
Yeah, I just wanted to give you that opportunity because you were tracking it pretty closely, considering you're in the state, and I knew you were going to reach out to some of these companies just to see what they're doing. And
Milton came and went. Wasn't really that big of a deal. I mean, I know that we saw the mayor of Tampa, I think, was on TV and saying, if you don't evacuate, you'll die. And there was a lot of sensational, Securely is 11.6 aftermarket. There was a lot of officials that were sensationalizing the storm, that it was going to be this massive Cat 5 hurricane that came and just blew everything down. I can kind of side with them on that, because historically in Florida, if they don't strike the fear of God into you, there's a lot of people that are like, well, it's not going to be that bad, let me stay. And then the storm comes, it's worse than expected, and they're in a real bad way following. But no, it came and went, and it looks like everybody was in one piece following the storm, which is good.
Yeah, as someone who used to work at CBS myself, the fact that they would sensationalize a storm, of course, it's you got to go 24/7 news coverage on something like that. And there was a ton of tornado warnings too, so it was a lot to track. And obviously, I've got family in Florida. They pulled through okay. Everyone was thinking about Florida for pretty much the whole week. So yeah, it was good to see, people pull through and doing okay, including yourself. So
yeah, it was fairly benign here. And I guess without further ado, Arns, let's bring in Mic Drop and take us into the weekend. I think my cleaning ladies are outside my office with their vacuums. Bring in Mic Drop, Arns.
Yeah. So, in honor of the Benzinga conference, I have an AI assisted sonnet. In Chicago's halls, where winds of change do blow, a conference gathers where the green does grow. Benzinga's call, a beacon in the night, from minds and souls who strive for cannabis's right. From hemp's first thread to high grades blaze, they speak of markets, laws, and future days. Innovations spark in speeches bold and clear, a vision painted of what might appear. The industry's nights with charts and graphs in hand discuss the growth, the risks, the promised land, where policy might shift and profits soar in legal states from coast to distant shore. This conference, not just talk, but actions call for cannabis to rise and break the old thrall. It's kind of where we're at. So, yeah, I think the Chicago Atlantic guys said it well, and you asked some really good questions about sort of like where we're at and the investability of some of these companies. So, it's hope springs eternal, but yeah, man, we're all really overdue for a catalyst, it feels like.
Yeah, it'd be nice. It'd be nice to get some luck on our side. And I was bummed I didn't get to go to Benzinga, but like I said, I'm sure there'll be other ones. I might go to MJ Unpacked in Missouri in November just to check out what's going on with that market. But I guess with that being said, everybody, thanks for tuning in. Going to take us into the weekend. Shad will be back on Monday, and we'll have David Klein on next week. It's not confirmed yet, but it's either going to be Monday or Wednesday of next week. We will have him on the show, and we will see you all on Monday. Have a good weekend, everyone.
Hug somebody.
Hey everyone, thanks for watching our latest podcast. Lots of momentum building. You guys getting all excited? Leave comments below. Again, we want to take this viral. Smash that like button and make sure to click on that bell for all notifications as we start to bring on bigger and bigger guests. Don't forget to subscribe to our daily newsletter, the Baked In newsletter, by logging on to thedalesreport.com. And we want to take this viral, as I said, and make this community grow. So make sure to subscribe on that channel because we wouldn't be here without you. Thanks again, everyone, for watching.